Welcome to Ty and Rye, the Finance Guys Market Mini Report, a short podcast that updates you on the past week's important topics and trends. Remember, this is not an offer to sell, and past performance does not guarantee future returns. Here are Ty Hansen and Ryan Robertson.
Hello and welcome to another Market Mini for the week ending August 27th. For the most part, it was a really good week. We're seeing some good returns. I think most people, you probably saw a little bit of a hit to your portfolio last week, but we've pretty much recovered most, if not all of that this week. Especially today, we're seeing a nice little pop in the market, especially today. So small cap was the winner on the week, and the lion's share of that return for small cap came today. And I'll jump into that into a second here, what's kind of going on. So for the most part, the market's up about 1.5% on the week. Again, small cap being the winner. Nasdaq's up about a little over 2.5%. So all in all, pretty decent week in the market. Aggregate bond index is down a little bit. Again, we're still kind of feeling some of that inflationary pressure. So that's what's going on there. Cryptos also, on average, were down a little bit this week. For the most part, I mean, there's definitely still some there that were winning this week, but cryptos were down a little bit this last week. So a couple of interesting stories this week from just general economic data. We saw that home sales and new home sales, and new home starts, things like that, were up. This last week, we're seeing higher data for the last month of data we received. So, I know a lot of people are hopeful that we'll see the real estate markets kind of slow down. Hopefully, it'll bring the chaos of those markets down a little bit. But things are still surging there in that regard. Another big thing we saw this week was the core consumer price index, right? So core takes out a few things. It takes out some of the food and energy pieces of inflation. Still saw that bump this week. It was up right around where analyst estimates thought, just up 0.3% over the previous month. So again, we're still seeing some of this inflation scare, some of this inflation rise, right? Now, what's interesting though is you're like, okay, well, earlier in the year, as we got inflation news, people would freak out, and we saw some bigger swings in the market, some bigger peaks and valleys when we saw more of that data. So it's kind of slowing down a little bit as far as market reaction to some of that inflationary scare. So people ask, well, okay, well, why are people a little less scared? Why are we seeing less movement in the market? I guess I shouldn't say less fear from people, because people are still definitely afraid of what inflation is going to do. My thought is that what we're seeing is the story keeps being told, right? The Federal Reserve is basically coming out saying, look, we know inflation is going to happen, right? We're at all-time lows. The last 3 to 4 year trailing inflationary data is just insanely low, right? Well below the what was the expected numbers. So as we're seeing inflation pop, the primary reason for that has been from kind of this COVID lag, right? Production, supply chain, all that kind of stuff, right? Lack of automobile production, things like that, right? And so again, I'm pretty hopeful and optimistic that that's the right idea, right? That yes, inflation is happening. Yes, prices are going up, right? I am, however, still optimistic that a lot of that is due to this kind of this COVID lag, right, from what happened from COVID. So again, still something that's number one on my radar, but all in all, the markets are handling it very well, and economic output is still really strong. We also had some information today come down from the federal chairman, Jerome Powell. So, and there was a lot of analysts kind of waiting in the wings to see what would happen there. So previously over the last few weeks, we've heard that the Fed's thinking about making some changes and starting to kind of ease back on the buybacks of treasuries, which will cause rates to go up, and people are afraid that'll spike inflation and slow down the economy. That was at the beginning of this year. It was scheduled to not really start to take place until end of 2022 into 23. However, the last few weeks, the Fed's like, we may start doing that at the end of this year. Powell today again was like, look, we don't know if we're going to necessarily start it, as early as the end of this year. So I think that really is the catalyst to today's pop in the market, because again, the market's like, hey, that's great. We got a little bit more time to kind of play in this kind of environment of what's going on with good economic growth, with all that data. So long and short is we're still riding this high. We still are seeing room for growth, and the markets are still climbing. So appreciate the time, appreciate your listen. Again, check us out at tyandrye.com, and we appreciate your time listening to us. Have a great weekend.
Thanks for listening to Ty and Rye, the Finance Guys. This is our weekly market mini report. New episodes of this will be put out every Monday, so make sure you don't miss those. Also, the longer podcasts, more in-depth discussions, those will drop every Saturday. So subscribe on your favorite podcast platform, or follow us on TikTok, Instagram, Facebook, Twitter, YouTube at Ty and Rye Podcast. That way you don't miss any new episodes. Thanks for listening, everybody. Hope you have a great week.